Welcome back in to Eye on Agriculture. I'm Britton Rucker. Today we're taking a look at the cattle market and what producers can expect heading into the new year. Joining us now, OSU Extension Livestock Marketing Specialist Daryl Peel to break down current market conditions, the impacts of reduced packing capacity, and what it all means for prices moving forward. Daryl, what's the current overall temperature of the U.S. cattle market right now?
You know, the fourth quarter, we've seen a significant correction in cattle markets. A lot of external focus on the market, a lot of political focus has impacted the market. So we've seen a significant correction in prices this fall. And unfortunately, it was coming at a time in the fourth quarter when a lot of producers were marketing calves and so on. So it did impact some producers fairly significantly.
So how are cattle prices trending as we close out the year?
You know, as we get into December here, we're kind of stabilizing from this correction. I do expect to see some recovery, and I think we're starting to see some of that. Some of that recovery will happen in December. Some of it, I think, will probably carry over into the new year. So we're going to see these markets bounce back, again, depending on kind of what the external influences are on the market.
Yeah, let's talk a little bit about how producers are feeling. Are producers still feeling the effects of historically low cattle inventory levels?
Oh yeah, the overall market situation where we are is really driven by the supply side in conjunction with strong demand. But, you know, cattle inventories are still low. And, you know, even with the correction we've had in the market, we're still well above where we were this time last year. Again, once this market picks back up and sort of gets back to focusing on the fundamentals, I do think we'll pick up and continue on from here. In terms of a reflection of where those cattle numbers are and what we're looking for going forward.
Now, Daryl, a lot of people are wondering kind of what's driving this. In your opinion, what's driving the supply and demand balance in the beef industry at the moment?
Yeah, it's really a combination of this supply side, which is extremely supportive. You know, again, we have multi-decade lows in cattle inventories. Cattle numbers continue to tighten, and we're really just seeing that work its way through from feeder cattle supplies, which are very tight. And of course, we've had some additional disruptions with the Mexican border closed, for example. But then that works its way through feedlot inventories, which are continuing to decline. That leads ultimately to lower beef production. All of that is very supportive from a supply standpoint. And at the same time, we've had remarkably strong and resilient beef demand, even though we're at record high prices for beef in the U.S.
Let's talk a little bit on the packer side of things. We've seen packer capacity reduced. How is that impacting the market today?
You know, in terms of overall market impacts, I don't think it's going to have a huge impact. Of course, the closure and the reduction that Tyson announced won't really take effect till after the first of the year at some point. But even so, I don't really expect it's going to have a major overall market impact. There's still going to be excess capacity because cattle numbers are so low. Even with this reduction in capacity, there'll still be, you know, the remaining packer capacity will still be chasing cattle. So now for folks directly involved in those plants, there may be some impact, certainly. You know, obviously we may see some additional or some differences in movements of cattle that would have normally gone to those plants or that, you know, that shift or whatever that have to be redirected somewhere else. So there's some local impacts, but probably not too much in the way of overall market impacts.
So if you were a typical Kansas cow-calf producers, you shouldn't worry really about these packing plant slowdowns or even closures right now?
Not right now. Okay. You know, again, the excess capacity is going to continue. Now, someday, you know, probably several years down the road, it may become more of an issue. If we rebuild cattle numbers to a point, we will hit a capacity issue quicker now with this reduced capacity, but that's probably several years down the road before that would become an issue.
And any impact with regional differences in these reduced packing capacities in the cattle market?
I don't think there's huge regional differences other than, again, you know, obviously directly affected individuals that were marketing to those plants may have to shift locations and so on. But, you know, the Nebraska plant that's closing is in the midst of a lot of packing plants. And I think that's one of the reasons why it becomes sort of a victim in this thing. The Texas plant is reduced in capacity simply as a function of numbers of cattle. But it's still there and probably will, you know, again, once cattle numbers rebuild at some point in the future, I would expect that plant to go back to double shift production. Longer term.
Yeah, and speaking of the short term, what are some short term expectations you have for slaughter numbers and processing speed?
Yeah, we're going to continue to see slaughter decrease. Fed cattle slaughter is down this year. Of course, beef cow slaughter or cow slaughter in general has been down significantly the last 3 years. Fed cattle slaughter has declined significantly in 2025, and it will continue to fall in 2026. Again, we're still seeing, we're working towards the sort of maximum impact of tight cattle numbers, and we're not there yet. It's still several months to perhaps over a year away from us.
Now, as always, Daryl, I'm going to ask about your crystal ball. Looking ahead, what should producers expect in terms of cattle prices in the next 6 to 12 months?
You know, as scary as it is to say it, I mean, we've had record high prices in 2025, even though we've had a correction in the short run. I do expect this market to bounce back again based on the fundamentals. And so overall, we're expecting higher average prices in 2026 and probably carrying into 2027. At this point in time, we have not seen the tightest supplies and we have not seen the highest prices yet.
Yeah, some good news for people headed to the sale barn. What key indicators will you be watching that signal where the cattle market is headed next?
You know, probably the biggest question for several months now in the industry has been indications of heifer retention that would lead to some herd rebuilding. We still don't really have any indication of that. We may, you know, it doesn't look like we've got any significant heifer retention happening as we close out 2025. Once we have sort of definitive signs that heifer retention is happening, that'll start the clock towards those, you know, peak prices, if you will, or at least peak tightness of supplies. And that would be several months, a year to a year and a half after that. So we're pushing that timeline out as we go forward. We'll be looking forward, you know, going into the new year with the annual inventory numbers for January 1, which will come out about the 1st of February, roughly. And that'll be, you know, we'll certainly be looking there for the official confirmation of where we are in terms of the herd inventory, as well as the replacement heifer inventory.
Well, Daryl, as always, thanks so much for coming on the program and chatting with me. Everyone stick around.